In this podcast episode, Ben Mallah shares extensive insights into the current and future state of the real estate market, his personal investment strategies, and wealth building principles. Topics range from distressed assets and banking relationships to practical advice on property management, financing, and navigating today's challenging market conditions. Ben also touches on his personal journey, lifestyle decisions, and the importance of consulting and education in real estate investing. Ben underscores that banking is the most crucial relationship a real estate investor can have, often joking that the banker comes before one's spouse in priority. For most investors, especially those just starting out, the bank is essential because few have enough personal capital to purchase properties outright. A strong banking relationship provides access to capital with favorable terms, which evolves as investors gain experience and demonstrate lower risk. Ben highlights working mainly with Bank of America due to their comprehensive brokerage and banking services, enabling him to secure highly leveraged loans at attractive interest rates. Ben paints a stark picture of today's real estate market, particularly in multifamily and commercial sectors. Many investors overpaid during the COVID years at ultra-low interest rates, around 3%, with short-term fixed loans. Now, with rates doubling and loan maturities arriving, refinancing becomes a major challenge as properties no longer generate sufficient cash flow at these higher rates. This creates widespread distress, with some owners simply abandoning properties due to financial strain or lack of operational experience. Banks are caught in a dilemma. They know many loans are underwater, but hesitate to admit losses to protect their stock prices. Ben describes ongoing delays by banks, but warns these are only temporary solutions as values continue to drop, vacancy rates rise, and capital improvements remain unfunded. Ben advocates for diversification and buying real estate that makes financial sense rather than chasing tax benefits alone. He balances between stabilized triple-net leased assets like Tesla dealerships, providing steady, low-risk income, and value-add projects such as large multifamily rehabs managed by his sons, who live on-site and actively engage in operations. This hands-on approach helps ensure effective management and stabilization prior to bringing on external property managers. Ben discourages purchasing single-family homes purely for cash flow, highlighting their poor yield and management inefficiencies compared to fourplexes or larger apartment buildings. Ben discusses the practical realities of dealing with 1031 exchange requirements, explaining his own experience having to reinvest tens of millions of dollars from the sale of various properties to avoid significant capital gains taxes. He acknowledges there are times when paying the tax can be sensible, especially if suitable deals are unavailable, or if the investor wishes to downsize or prepare assets for inheritance. While deferring taxes is generally preferable, Ben stresses that buying solely for tax benefits without solid underlying deal economics is a mistake. Ben openly reflects on some of the properties he sold, such as a Harley-Davidson dealership and a Home Depot, citing declining market dynamics and changing consumer trends as reasons to shift capital. He admits that some sales might have been premature, as he anticipated banks would be more accommodative than they turned out to be. His purchase of a Tesla dealership represents a strategic shift towards safer, lower-maintenance assets with long-term, creditworthy tenants. Ben explains how he calculated the cap rate and leveraging possibilities to make these purchases profitable, even in the current environment. The podcast delves into the practical expenses and management of owning extremely large and expensive assets, such as multi-million-dollar mansions and yachts. Ben breaks down the recurring high costs, including full-time staff for cleaning and maintenance, landscaping, insurance, and property taxes that often reach hundreds of thousands of dollars annually. He also notes the importance of thoroughly evaluating contractor bids and not accepting inflated prices simply due to the property's scale or luxury status. Ben advocates for getting multiple bids, researching industry standards, and maintaining control over expenditures to protect wealth effectively. Ben shares his son's experiences living in apartment buildings they are rehabbing and managing. This immersion confers operational advantages, allowing for rapid problem-solving, tenant engagement, and close oversight of rehab projects. He suggests that for investors entering multifamily markets, particularly those with large or complex properties, physically living on site, even temporarily, can be a powerful strategy to mitigate risks, maintain control, and improve cash flow stability. Ben advises avoiding office space investments, currently due to widespread vacancies and poor leasing prospects. Multifamily remains the best performing sector for steady income and bank financing. Retail properties can be profitable, but only if purchased with vacancies to add value through leasing. Storage and hotels vary by location and demand and are better viewed as businesses requiring active management. Ben emphasizes the indispensability of good property management, stating it is everything to maintaining and improving investment performance post-acquisition. Ben encourages buying properties that are actively on the market rather than chasing off-market deals, which he views skeptically. Understanding the seller's motivation by asking brokers for the story behind each deal is critical. He advocates lowball initial offers, sometimes walking away to let sellers chase the deal, all while setting firm maximum purchase prices based on detailed underwriting. Ben shares examples of making very low offers on severely distressed or rehab-heavy deals that others might avoid, underscoring the importance of discipline and patience to prevent overpaying. When asked how to know if one has sufficient expertise to get into real estate investing, Ben advises that formal education only gets you so far. Learning on the ground through hands-on management, dealing with tenants, day-to-day problem-solving, and running your own properties is crucial. He strongly recommends new investors start with fourplexes or small multifamily properties to gain real operational experience before scaling up. Ben also highlights the value of consulting with experienced investors and professionals to accelerate learning curves and avoid common pitfalls. A passionate part of Ben's work is consulting with both new and seasoned investors. He offers practical advice tailored to individuals' unique financial situations for modest fees, emphasizing that his motivation is personal satisfaction from helping others succeed. Ben enjoys demystifying real estate investing for beginners, encouraging young people to get licensed as realtors to gain access to deals and networks, and showing them how to start building wealth step by step. Throughout the episode, Ben shares candid thoughts on his evolving priorities as he leans into retirement and slowdowns in deal activity. Although less driven by passion than in his youth, he remains engaged through supporting his family's projects and consulting work. He also discusses managing personal finances through diversified investments, emphasizing tax-free municipal bonds for safety and leaving more aggressive growth to others. On lifestyle, Ben talks about the balance between enjoying wealth, managing expenses, postponing frivolous spending anxieties, and ensuring his assets are maintained properly. Ben expresses frustration with political leadership, perceiving a lack of business acumen and vision among most politicians. He calls for more fiscally responsible, accountant-minded officials who focus on budgeting, efficiency, and realistic policies rather than ideology. He shares a personal anecdote about proposing a waterfront Ferris wheel to boost local tourism, which stalled due to bureaucratic hurdles. His overall view is that private sector drives economic success, and government should be lean, fair, and focused on essentials like policing, roads, and schools. Looking ahead to market conditions, Ben foresees continued distress and property devaluation until banks clear troubled assets from their books. He predicts that properties significantly underwater will require short sales or concessions, with banks and owners agreeing on losses to avoid further deterioration. Ben remains vigilant for good deals, noting that speed and cash availability are key competitive advantages. He believes real estate remains one of the easiest and most effective paths to wealth, provided investors focus on buying at the right price and managing assets responsibly. Ben emphasizes that motivation and drive are the primary obstacles to wealth creation. While it is easier than ever to build wealth today, thanks to technology and accessible knowledge, many people lack the burning desire to put in the effort. He respects those who choose simpler lives, but believes success requires a committed frame of mind and logical planning. Hard work and perseverance, he says, are the rewards themselves. Ben encourages listeners to surround themselves with knowledgeable professionals, take action promptly, and continuously educate themselves. Though skeptical of artificial intelligence for final underwriting decisions, Ben admits that technology can accelerate aspects of real estate work, such as contracts, leases, and organizing spreadsheets. He trusts his own hands-on analysis for critical cash flow and valuation calculations, but recognizes younger partners and his sons use AI and software to great effect. Ben remains firmly rooted in old-school principles, but is open to combining them with modern tools for efficiency. Ben distinguishes between buying real estate for personal use, such as a family home, which often makes sense for lifestyle reasons, and buying for investment, where cash flow and return must be prioritized. He cautions against purchasing single-family homes solely for cash flow, preferring multifamily or commercial properties for predictable income streams. For homeowners, improving and adding value makes the most financial sense, but an investment mindset requires rigorous underwriting and discipline. Management quality can make or break returns, Ben stresses. He encourages investors to be in control, understand property conditions, and carefully plan rebabs and maintenance. He highlights the importance of preparing for replacement of aging equipment, roofs, plumbing, and other capital items on a realistic timeline. Poor management or inexperienced operators lead to higher vacancies, deteriorating assets, and loss of equity. Involving trusted teams and, when necessary, corporate-level professionals can help large portfolios thrive. Throughout the discussion, Ben shares vivid stories, including flipping properties quickly, dealing with extreme contractor bids, negotiating multi-million-dollar deals sight unseen based on deep market knowledge, and overcoming challenges like flooded apartment buildings or stalled hotel refurbishments. These examples illustrate the necessity of experience, thorough due diligence, and confident decision-making in a complex marketplace. Though contemplating retirement, Ben plans to remain actively involved through consulting and supporting his children's real estate ventures. He discusses the challenge of delegating to younger talent while retaining oversight. Diversifying assets for stability and legacy is a core focus, and he hints at possibly hiring skilled corporate professionals for portfolio management. Real estate, to him, is a lifelong pursuit that evolves with each generation. Ben encourages aspiring investors to take that first step by obtaining a real estate license, getting involved in local deals, and gaining experience through managing small properties. He stresses that avoiding inexperience-related errors requires learning by doing, consulting experts, and maintaining discipline in underwriting and management. Starting with manageable properties like fourplexes or small apartment buildings is more prudent than jumping straight into large or complicated investments. Ben contrasts his real estate-centric strategy with his more hands-off approach to stocks and bonds. He prefers municipal bond funds for their tax advantages and stability, letting experts handle equity investments. His son enjoys trading more actively, but Ben himself focuses on areas where he has expertise. The key is leveraging strengths, diversifying appropriately, and maintaining liquidity to seize real estate opportunities as they arise. Ben opens up about personal priorities, discussing the struggle with spending anxieties and the need to enjoy wealth responsibly. He believes in creating memorable experiences that justify discretionary spending and advises not to be overly cautious if the expense is affordable and meaningful. The conversation also touches lightly on health and lifestyle choices, reflecting his human side and awareness of mortality. Ben finds great fulfillment in consulting, viewing it as a way to positively impact others' lives and share decades of hard-earned knowledge. He believes real estate education is lacking in formal institutions and that mentoring can bridge that gap. For Ben, teaching others isn't charity, but a personal mission to improve lives and foster a culture of success within the investment community.